right. What is up, tycoons? What up, traders? Super excited for today's video. We're going to look at near protocol on the daily chart. I'm going to break it down for you guys. We're going to go over some chart patterns that you can start to use for yourself and chart up. We're going to go over these three levels right here using the fib tool. Okay, we have the 38.2, the 50%, the 61.8%. Those are some very, very important key levels that you can use. And I'm going to give you guys examples of how I've used them and how you can use them as well. And also, we're going to go over divergences, okay? Specifically on the relative strength index down here. When you see something making, for here in this example, we have lower lows, right? But the relative strength index is remaining flat. So as the token is dropping in price, the relative strength index is not getting any weaker. It's having the same amount of strength. Okay, that's known as a slight bullish divergence. And if we take a look, that was a very, very impressive move. Using the divergence, you could have caught this 115% move right there. Okay, so currently what we have again is this chart pattern on here, and it's known as a descending wedge. All right, it's a bullish pattern. And what you're going to see is the price action zigzag in between here. And ultimately, in a perfect world scenario, it would break out up here to where the pattern began. Okay. But if we look, we really have to break through these resistance levels. We've already hit resistance there and we're pulling back. The key important thing is going to be breaking through these levels and then breaking through this trend line on the top to get that nice move to the upside. Now, how do you use these? Well, in this case, you take your swing high to your swing low, right? And you're going to retrace. Nothing's ever going to move in just one direction, right? So we see we get the nice move to the downside. We retrace, get rejected at our 61.8% level, and then have another impulsive move to the downside. So right here at these price targets, what we've done is taken this high down to the lows down here, and we see that we're already retracing, facing some resistance at the 50% level. But if we're able to get past these levels, then we have a good chance of continuing bullishness. What we have on the chart is a very long divergence, right? From there, and then the relative strength index, has kept the same low from that date, right? This is all the way back in May. So in May of this year, it's currently almost the end of October, right? We see that the relative strength index hasn't gone down in the token, even though it's been dropping a lot. It hasn't lost any of its relative strength. Okay. That may be why we're getting this small pop here, or that may be the factor that continues us to break out of there and ultimately break out of this channel. Now, none of this is meant to be financial advice, but really rather just educational and, just hopefully teach you something new. All right. So if you learn something new, smash the like button and subscribe to the channel because I'm making videos like this every single week. We'll go over here to the beginning of the chart, and what we have is known as a bull flag, right? This pattern right here is a bull flag. It's a bullish pattern, and once you break this trend line on the top, you're going to get a very strong impulsive move to the upside. If you're wondering what these levels are on here for, no, these weren't resistance. What we did was we took the low up to the high, right up here, and we see that once we come up, again, nothing moves in one direction. We retrace and get the very strong move to the upside, right? We hold the 50% level on the retracements. We were just looking at them for resistance earlier. Now we're looking for them at support, right? If we would have broken this level and then broken this level, we would have continued heading back down, but we didn't. We came up, we retraced, and we continued up higher, okay? Now, I want to highlight how there's some divergence here, and we can go over the examples and how this could have saved you between 40 and 50% losses, okay? If we measure from this high down to here, okay, that's a 46% drop. And if we measure from this high right here down to this low right here, that's a 57% drop. Now, instead of bullish divergence, we had a bearish divergence. So we have a high here, a higher high here. We have a high here, a lower high here. So as the token is going up in price, the strength should also be increasing, right? Well, that's not the case. What we're seeing is that the relative strength is actually getting weaker. That's when we got that 40% drop. And then ultimately from here, we have a high, higher high, and we see that we got the very strong 50% plus drop to the downside. All right, now we were able to recover from that. And the next signal we had again was some bearish divergence, right? And this was an even bigger drop, I believe. From here all the way down to those lows was 64%. if you, let's say you bought in around here, right? Or you bought in on this pullback, or you bought in on this pullback when we had the nice double bottom, okay? And you're wondering, should I take profits up here at these levels or should I hodl, right? Is there still more room? Well, using the relative strength index and looking out for divergences, you can give yourself some signals, right? Now, whether they're buy or sell signals, it just depends on what type of divergence. But again, we see, the relative strength index is making lower highs in a downtrend as this is up in an uptrend. The token's getting weaker in strength, and ultimately we get a drop, right? Now, this is the pattern we looked at in the very beginning of the video, that rising or that falling wedge, descending wedge, whatever you want to call it. And this is a case of it playing out, right? We get a very nice break to the upside. And look what we do, right? We take the measurement from the low up to the highs right here. And we see that we come up, we retrace and get a very strong impulsive move to the upside, okay? If we would have broken these three support levels, again, we would have came down and tested these recent lows, all right? Um, and up here, here's another example, right? So in this case, we're not really making higher highs or lower highs on the price. What we are is range bound, right? So we're trading in this range, in this box, but the relative strength is just making high, lower high, lower high. So as we're range bound and consolidating, you can see that, okay, well, man, this token is not going up in price. It's not going down in price. But what I'm seeing is that the strength of it is getting weaker and weaker and weaker the more that we chop and consolidate in this range. Again, indicator that you could see some bearish activity in the future. Right here, we're taking the highs down to the lows. And again, we get a very nice retracement. We get rejected at the 38.2% level, right? So that's why I like to use these, is because, the 61.8 is the golden ratio, the 50% and the 38.2%. Those are the three most common levels that traders and algorithms are going to be looking at. And so if they respect them, then it's a very good sign of what the trend is going to be, right? So right here, we respected it and we can see that the sign is definitely bearish, okay? If you break the levels, then it's a sign that, okay, well, maybe we're reversing out of this and potentially going to go up higher. Okay, so that was basically it. We're back here at the most recent data on the chart. Just wanted to give you guys a quick update and then also break down the entire history of the chart and what I've been looking at, by different buy and sell signals. So if you found anything useful, again, smash the like button, subscribe to the channel because I'll be making content like this every week. And also leave a comment down below on any specific ticker you would like me to analyze, because I do viewer requests every single week. And if you made it this far into the video, I appreciate you, and you're really going to like one of these next videos.